Hello investors, welcome back to your number one place for all your investing needs. So guys, in today's video, we're going to be discussing the top 5 stocks to be buying on this dip right now. As you guys can see, the market has been dipping for the past week or so. We've dropped over 2,400 points since the high here on October 12th. So in the past week or two, the market just been down, down, down. I mean, if we look here on the 5-day, we went from about almost 28,000 points to 26,500. So 1,500 points down real quick. Futures are green right now, but we'll see what happens tomorrow at the open. But right now, we're going to be discussing the top 5 stocks to buy on the dip right now for the rest of November. Obviously, these are stocks that either had earnings just happen with some really good earnings, or just stocks that have good buying opportunities depending on what happens in the near future. So let's get into it. Now, before we get into all of November's picks, guys, can we get 100 plus likes on this video? Go ahead and smash that like button for me. We're trying to get 10,000 subscribers by the end of the year. So if you guys are interested in this type of video, obviously press that subscribe button, turn on that bell notification so you get notified every time I make a new video. And also leave a comment below. Do you think we're going to have a market crash right now, a really big crash after the election, or if the stock is just taking a little bit of a downturn, pre-election, and it's going to continue to trend back up? So leave a comment with your predictions below. Let's see who's right and who's wrong. Now let's get into the countdown. We're going to be starting this off with a bang. So number 5 is going to be Google. So GOOG is the ticker symbol, obviously. Alphabet, better known as that. So obviously you guys know that they just had earnings last week. Earnings were amazing. Actually, one of the best earnings they had, or the best potential that I've seen actually out of the big, the big tech companies. So this one, even though year to date it's only up about 28.52%, this one is actually kind of lagging behind the market and what everything else did. So this one was down here at about $1,000 per share when the market crashed, and it's only back to about 1,600 right now. So it still has a lot more to grow. Now, if we take a look here for the 1 month, it's up about 10%, and then on the 5-day, it's actually red. But on Friday, pre-market after Thursday's earnings, it did really well. It went from about 1,500 all the way up to about 1,655, 1,660. It made a pullback, obviously, as the market continued to go down, so it pulled it down. If we would have had a green market, the stock would have been fine. Now with Google, they do not have a dividend, so there's no dividend for this one. Their market cap is 1.14 trillion. And if we take a quick look actually at the earnings and just to see, how well they did and what they have for the future. So they had earnings obviously on October 29, 2020. The EPS actual was 16.40 cents. EPS surprise beat by $5.20. Revenue was 46.17 billion, beating revenue by over 3.29 billion. That's a huge revenue beat. I mean, that's over, $3 billion. That's a lot of money to be beating, revenue on. So Google is doing really, really good right now. Obviously, for their next earnings, they're expecting to have even higher revenue than this one. As you can see here, 46 billion. Here's 52. So they're expecting about 6 billion more in revenue in the next quarter. So we're definitely going to have to keep an eye out on Google in the future and see what they do for the next quarter as well. Now, here we go, guys. A lot of you guys are going to be loving this one. So the number 4 pick for the month of November is going to be NIO. So NIO is the ticker symbol. And this one is currently trading at $30.58. It was down about 4.41% on Friday, but it's been doing some amazing things. If you guys actually watched my previous video, I made a video obviously about the NIO stock and my prediction on the price and how it's going to be acting. A few things that we want to discuss is NIO just hit 5,000 vehicles, over 5,000 in October because we had a few days left over. They're going to be announcing that in a few days, so we'll know exactly what they did. That is the most they've ever done in 1 month, production wise. Obviously, also NIO also got some price upgrades by Morgan Stanley and JP Morgan, so that's definitely pushing the stock as well. If we take a look here on the one year chart, this stock is over 2,000% up. So this stock down here, when the Rona started, it was trading at around $3 per share. Now it's trading at over $30 per share. That is a 10x. If you would have invested $1,000, that currently would be about $10,000. If you invested $10,000, that would be over $100,000 right now. So NIO, this is obviously the Tesla, the Chinese Tesla. That's what everybody calls it. And NIO has a lot of potential. And it's actually a stock that I've recently added to my portfolio as it just continues to go up. I mean, if you look in the 1 month, it's up 44%. The stock just continues to trend on up. right here, it got an upgrade for JP Morgan. It went from $21 all the way to about $26, continued to trend up, traded sideways for a while, got another price upgrade, hit highs here of about $32. So this stock is doing amazing, and as they continue to, ramp up production and do better numbers, they're going to be continuing to do even better, and especially once, they start to grow out of China, they're going to do really, really well. Now, if we take a look for earnings for them, they had earnings on 8/11/2020, EPS actual negative 17 cents per share. EPS surprise beat by 9 cents, so they beat on revenue as well. It was 535.73 million, beating the revenue by 33.79 million. That's a huge beat for them. I mean, that's a pretty decent beat, especially for a company like Neo. They obviously have earnings coming up in the next few days. We don't have an exact date, but it should be hopefully this week or next week. They're expected to have similar quarter as the previous one, especially with the EPS estimates, same 17 cents negative. Revenue is predicted to be a little bit better, coming in at about 616 million. So we'll see how that goes. Depending on what happens with these earnings, that could definitely push the stock up or down. And then also we're going to have to watch the election and see how all that goes, and see if we get any more price upgrades from any analysts after earnings and how that pushes the stock as well. All right, coming in at the number 3 spot, it's going to be ticker symbol FB, which is going to be Facebook. Now, before we get into this one, guys, if you guys made it this far into the video, once again, don't forget to smash that like button. Let's go for 100 plus likes on this video. I'd really appreciate it. It helps the YouTube algorithm and just helps the channel grow overall. And let's try to get over 10,000 subscribers. So go ahead and subscribe to the channel and leave a comment below. What stock are you going to be buying in the market this week? Or if you guys are selling, or what are you guys going to be doing? So Facebook, here we go. Year to date, this stock is up about 39.77%, almost 40%. When the Rona happened, the stock pulled down to about $146, hit a high here of about $304, $305. So we're down about $40 since that high. Earnings were amazing. The stock had amazing earnings, but we made a pullback, huge pullback, 6.5%. This is a great dip buying opportunity in my opinion personally. This stock does not have a dividend, obviously, but their market cap is $749.41 billion. My prediction is Facebook should hit that 1 trillion market cap in 2021. Hopefully, that's what I'm predicting. But let's take a look at earnings actually and see how well they did, because they had earnings last week, actually on Thursday. So October 29, 2020, EPS actual was $2.40 per share, beating by 49 cents. That's a huge beat. Revenue actual 21.47 billion, beating the revenue by 1.67 billion. That's another huge beat. I mean, that's like a 5% beat on the revenue. Revenue is doing really, really well. A lot of the social media stocks were doing really well. All this social media stuff is doing good. Pinterest had some amazing earnings. Pinterest, jumped up a lot. Snapchat was up a lot. The only one that was down actually was Twitter. Twitter, really tanked after earnings, but Facebook, Snapchat, Pinterest, they've been doing really, really well, especially right now in this Rona situation going on. And I think that these, big dips on these stocks like this, especially like Facebook, a lot of people say that this is a great buying opportunity, and I agree. I'm going to be buying the dip, especially on this one. I mean, if it goes below 250 this week, depending on what happens this week with the market, if we're going to continue to go down, anything below 250, I'm definitely going to be loading up more into my portfolio. So I'm going to be keeping this one on my radar. Okay, we're getting down to the list. So the number two stock on our list is going to be ticker symbol ENPH. This is going to be Enphase Energy. Enphase Energy is currently trading at $98.09. It was down about 4.31% on Friday at the close. Now, if we take a look here, for the past year, this stock was up 422%. When the Rona happened, it was trading around $24. And now it's, hit a high here of about $118, $119, and made a little pullback as a lot of the solar stocks kind of had a huge run up. They needed to get a little breathing area, obviously, as they were running up a lot. And the thing with the solar stocks right now, and a lot of the EV and, clean energy stocks, a lot of them are running up as they are predicting that Joe Biden is going to win the election. So a lot of these are moving on that as well. So we're going to see what happens, actually once they announce, who's the winner, Trump or Joe Biden. That's going to actually influence a lot of these stocks to move up or down depending on who wins. So Enphase Energy is one that I've loaded up in my portfolio personally. It's in my growth stock portfolio. Just to be transparent with everybody, I do have it in my portfolio. I believe my average share price is somewhere in the 90s. Now, I did own this stock actually when it was trading at around $10 to $15 down here in 2019. One of my friends actually told me about this stock, and I bought it here when it was $15. I sold somewhere in the 20s. I kind of regret, obviously selling, but we can't predict what's going to happen in the long run. But I'm predicting that Enphase Energy is going to continue to go as we are, switching over to that clean energy, to the solar energy. So this one, no dividend, market cap is super low. It's only at 12 billion right now. So this one has a lot more room to grow. They also had earnings last week, and their EPS actually was 30 cents per share, beating by 6 cents. Revenue was 178.5 million, beating revenue by 9.21 million. So it beat earnings. Obviously, it wasn't nothing crazy, not no blowout earnings, but the earnings were pretty good. I mean, they beat on both, so that is something positive for us to look forward to, even in this situation here when a lot of places are on lockdown and a lot of things are going on. They're still predicting to do very, very well in the next quarter, and I think that this stock has a bright future from further on out. So I think 2021 is going to be another great year, and any dip on this one I'm obviously going to pick up again once, like I said earlier with other ones. And now, obviously, we left the best for last. At the number one spot is going to be ticker symbol FDX, which is going to be FedEx. So FedEx, wow. So this one is a great opportunity in my opinion. I mean, in the past year, it's up 66%, but it was down here at around $94 when the Rona happened, around $90. It went up, to a high of about $293. If we look here in the past month, how this stock was going, it was hitting highs here of about $293. It reported earnings. Earnings were great. The stock started to trend down a little bit, took some profits. People took profits. And then UPS released earnings, and that kind of brought the stock down. And then obviously the market started to go down last week, which brought the stocks even more down. Now, that doesn't mean anything. I like FedEx long term, obviously, and especially into the next quarter. I think that this stock is going to do amazing as we have the holidays coming up. So people are going to be Christmas shopping even more online now with the Rona happening. Even though before they were already Christmas shopping online, now it's going to be even more than the previous year. So I think that FedEx and even UPS are going to be, having their hands full in the next quarter with this. So I think their revenue is going to be amazing. And the good thing actually with FedEx is they have a dividend. So this is actually a nice dividend hold to have as well. They pay about $2.60 per year. Their yield is about 1%. Market cap at 68.13 billion. So this company is not too bad as well. Pretty safe company in my opinion. Obviously, this one had earnings. These earnings right here that they had. EPS actual $4.87, beat by $2.15. And then if we look at the revenue, 19.32 billion, beating revenue by 1.76 billion. Now here it says, they have earnings on 12/17/2020. So the quarter after that quarter, I think is going to be good. So, when they report in March or around March area, I think that quarter is going to be the blowout quarter where we have some amazing revenue, over 20 billion in revenue, maybe even higher than that. So we're going to have to keep an eye out on FedEx and see what happens actually in the next two quarters, because this quarter is reporting soon. So like we said, 65 cents per share, quarterly paying of the dividends. And then if we take a quick look here at the dividend yield for the 4-year average yield, 1.2%. It was, here, trending up, but obviously as the stock is going down, it averages down. If we look at the dividend growth here, they've had years of growth, 0 years is what it says here. But if we look here, the stock is doing amazing, $2.60 right there. If we look at the dividend history, the stock is doing really, really well. So, it's a quarterly paying about 65 cents, so not bad at all. Dividend safety payout ratio is only 16.5, so it's really, really low. I think that FedEx obviously has a really bright future, so let me know what you guys think. So guys, those are the top 5 picks for the month of November. Now, I want you guys' opinion, obviously, so leave a comment below. What do you guys think about these picks that I put on the list? Do you own any of these stocks in your portfolios? And just letting me know what you guys think is going to happen in the next few weeks or few months with the market overall. Are we going to have a pullback as the Rona is starting to pick up and we're hitting over 100,000 cases, in the USA soon? We're hitting those numbers. Europe is having a bunch of lockdowns starting up again. So what do you think is going to happen? Are we going to have another, market pullback / crash like we did in March? Or do you think this one's going to be, a little bit softer and it's going to continue to trend back up? Colder weather is coming, but hopefully we'll get a vaccine soon, which should help everything out. So leave a comment below. What do you guys think about that? So Obviously, guys, I'm not a financial advisor, so disclaimer here. Before investing into stocks, obviously talk to a financial advisor, do your own research. Don't buy stocks based off of anybody else's opinion. Do your own research before investing if you don't know what you're doing. This is just my opinions and my ideas of what I'm looking at right now and what I think is a good idea personally for me. And then you guys can make your own decision and do your own research. So if you guys enjoyed the video, go ahead and smash that like button. Let's get over 100 likes. Subscribe to the channel so you get more content like this into your subscription box. And I hope to see you guys next time. Goodbye.